Welcome to the Upskill Center. Today we are talking about emerging issues in the accounting world and the reporting world. We are talking about IFRS 18, which is about presentation and disclosure in financial statements. It takes effect on 1st January 2027. And there's a piece that we have done another video on it. But today we'll be looking at management-defined performance measures. The IFRS board has given instructions on how to use MPMs, management-defined performance measures, under IFRS 18, which is actually an advancement. So I'm a CPA, I'm a CCP, and I'm a CFE. So I'll be taking you through this. Let's look at them. So the value discussion, I like to ask accountants many times, what's the chance that an accountant or finance officer can be nominated the staff of the year in a company, especially if we asked the staff to vote? What is the chance that the award would end up in finance? And that should answer at, do people find us valuable in the company? So let's get into MPMs. So the background of the IFRS 18, the ISB, International Accounting Standards Board, received feedback from investors that there was a problem in comparability. Actually, the background of and the real import of IFRS 18 is comparability of financial statement from entity to entity, especially by investors. So the definition and presentation has been inconsistent. So when we are talking about, in the other video, I've talked about how do we arrive at, how do we prepare the income statements under IFRS 18. So the idea was bring in comparability, consistency. So why are they guiding us on MPMs, management defined performance measures? Over the years, organizations have used non-GAAP performance measures such as earnings before interest, tax, depreciation and amortization, adjusted profit, underlying earnings. So non-GAAP measures that have been used, and then it becomes very hard because to compare from firm to firm, industry to industry, when you're using non-GAAP measures which are not explained. So IFRS 18 comes to cure that. There were comparability challenges, risk of earning management through selective adjustments. There was inconsistent calculations from period to period. So that is what the IFRS 18 captures and cures in terms of guiding us on MPMs. There was also lack of clarity on why management uses these numbers. This time, they have to explain to us why are they using these numbers. There was a disconnection between financial and statements and investor presentations because of that variability. So what are MPMs? What are management-defined performance measures? They are subtractors of income and expenditure that an entity uses in public communication outside the financial statement. It must be outside the financial statements to communicate management's view of the entity's performance. The elements, they are used in public communication outside financial statements. They are used to communicate to investors management's view of an aspect of the financial performance, and they are not listed. This is very important. They are not listed in the IFRS 18 or specifically required by IFRS. So what do we exclude in MPMs? We exclude financial performance measures that are not subtotals of income, non-financial performance measures like number of customers. We also exclude totals and subtotals specified in IFRS accounting standards. So if it is in the IFRS, it is not within MPM. So what are the disclosure requirements? we need to disclose a statement that the MPM reflects the management's view. It is the management's view, an explanation why the MPM is reported, an explanation of how it is calculated, of any change to the MPMs, and very importantly, a reconciliation to the most directly comparable subtotal in IFRS 18 or total or subtotal required by the IFRS accounting standards. So comparability, remember comparability. So, examples. So let's say adjusted profit, adjusted operating profit, adjusted earning before all that, you know, EBITDA. This qualifies, they qualify because as MPM because they are subtotals of